Hey guys, what's going on? It's Rekt Capital. Welcome to today's video market update. We're going to be focusing specifically on Bitcoin and its current retrace and whether it's over or not. Because most recently we lost the 10,800 level, which is a key monthly level. This was supposed to be one of the most important demand zones on the retrace. So ever since we lost this area of 11,400 to 600, ever since we lost that level, 11,100 was supposed to be the level that was going to hold and prop price up. But as you guys can see, dating back to even last year, we can see that this area doesn't really hold as a support. It has a very limited support price history. So it broke down very easily past that level, and it also broke down past 10,800, a very key monthly level. But the reason that it's a key monthly level is because it's a very good reference point for price. So in the past, even if we just look at this price action right over here, we tend to see wicks towards this area, especially upon breaking down from here. So wicks, these are essentially wicks and relief rallies just to test this into a new resistance. So since we've broken this area as a support, it's very likely that we might flick up into a relief rally into this area. But of course, we could see some wicking past this area. So tapping 11,000 isn't out of the question, but overall, this is the main sort of move that I'm looking for, that relief rally just to flip this into a confirmed resistance before moving down. So I don't necessarily think that the retrace is over just yet. It was only a 21% retrace, and technically it looks okay, and I'm going to talk to you guys about why that is the case. And what I mean by saying that it's technically okay is that generally whenever we see a breakout from a post-halving range, we see a breakout towards the upside, and then you can see the curling down in the price action, the sort of cupping in the price action, which shapes a lot of local tops. So this was a local top, and now we're seeing a retrace. But after a breakout from a post-halving range, we tend to see retraces in towards the top of this range high just to test it as a new support. And as you can see, we were very close to doing that. Very close indeed. Quite a bit of wicks over here, but not contacting the range high per se. The range high is 9,650, roughly speaking, and this happens to be confluent with a CME gap. So quite a bit of confluence there. So far, it's interesting to see that we've almost tapped that area, but we haven't quite done that. I still feel that if we see a relief rally from this point, just to rally into 10,800, 11,000, then we might see a retrace once again just to really test this range high as a new support. Because testing this range high as a new support is what needs to happen, at least historically speaking. The recurring price tendencies of Bitcoin just showcase to us that after a post-halving range breakout, we tend to see successful retests of the top of the range high before moving up towards the upside. So essentially, if we just look at post-halving price action, we should see the end of this retrace happen at around 9,650. And even if we just look at the 9,650 level in terms of price action and just normal price action analysis, you'll notice that's a very important reference point for price in general. So here you can see there's a clean breakout, but every time we've seen a breakout past this red level, this 9,650 level, we've always had a retest attempt. And if it was a successful one, we'd see a strong rebound. But if it was a failed one, as the purple circle showcases, we saw a breakdown from this level, and these tend to be quite strong drops, especially if we see a rejection from this level. So you can see how this is already a reference point for price. Depending on what happens to this point in price, you'll see the trend emerge. So here we have a clean breakout, and then of course we see overextension towards the upside, but then we see a pullback into 9,650. Of course, these wicks do happen, so they tap lower buy orders, and bargain buyers who set their buy orders a little bit lower, they get their buy orders filled before rebounding towards the upside. But overall, these overextensions past 9,650, they always drag back, pull back into 9,650 for a trend decision. So a successful retest attempt results in a strong rebound, but of course a breakdown and a failed retest attempt leads to more downside, especially rejections from this point in time. So this is where we saw a failed retest as well, and this is the most latest one. But you can see how this latest retest didn't really result in much downside after breaking down from 9650, and that just showcases to us that this range over here, the reaccumulation range after the halving for Bitcoin, is a very strong area of demand. You can see that in the higher low right over here. So this is the 8,700 region and the higher low relative to this low over here, so a higher low within this post-halving range. So it's interesting to see how there's quite a bit of demand here upon breakdown and then a curl up in here. So breaking down from this area, I wouldn't see much downside. It would be a breakdown into the post-halving range. This hasn't been done before after the halving ever, but we have to be open to that fact that if we see a breakdown from 9650, then we'll see a little bit more downside for Bitcoin. But at the moment, you can see that there is a very good price stability, price strength confirmation above this area. So we're seeing that price is still respecting the 9650 level. But we have to talk about breaching this multi-year resistance came after a solid few weeks of consolidation. And then we saw a breakout into a new bull trend. So the bull market confirmed itself the moment it broke out past this red trend line. And this is something that I essentially mentioned in my latest Forbes feature, is that we see a new bull market. The moment we break past that multi-year trendline resistance is when we see a new bull market emerge, but natural pullbacks and retraces are part of any healthy growth cycle, and they need to occur so as to continue the trend going forward. And Bitcoin could still retrace as far as 8,500 while still maintaining that macro bullish momentum, and I'll explain to you why. Because this area, this multi-year trendline resistance, the red level over here, hasn't been tested as a support. We just saw a clean breakout past that level, and now we're going to see a retrace, and it could retrace as far as this level for a retest attempt, and we'd still see a bullish trend. This would still be very much a bullish structure. The bullish momentum would be preserved, and we can see a retrace as far as this area. And historical bull market retraces are on average 35%, and so far we've only seen a 21% retrace. So that's interesting to see, because a 35% retrace would be around 8,000. So remember that whenever we see a pullback into a support, we tend to see a lot of volatility at a support. So downward wicks are possible, and actually bull market retraces end with long, volatile, short-lived downward wicks into lower price regions before actually reversing towards the upside. So that's something to bear in mind, because having a so-called stink bid as part of your dollar cost averaging strategy, that's an interesting strategy to keep in mind for your investing when thinking about scaling in slowly into Bitcoin on this retrace. And having said that, guys, thank you so much for watching. Please consider dropping a like if you enjoyed the video, and of course subscribe to more videos like this in the future. I'm Rekt Capital, and I'll speak to you in the next one. Speak soon.